All right, I'm Michael Hartzman. Today is Tuesday, November 25th, 2025, and I'm on as always with my partner Dominic Tavella. How are you, Dom?
Doing well, Mike. Different location tonight, but not too far from you. We get to do the show.
You know what? I'm a little confused. We're on the same time zone. It's pitch black where I am, and how are you still sitting in sun? Have you moved locate? Are you in a witness protection program? Are you someplace else
No, it's
completely?
it's real sun. I am out in the sunshine, Mike. I'm not hiding, but I am in Florida, working today out of the Florida office. But more important, down here for the holiday week coming up. So looking forward to some good food.
Yeah, well, it is Thanksgiving week, and Thanksgiving to you and Patty and the whole gang. So here we are, more than midway through the last quarter of the year, and all the numbers are negative. Just let's just deal with it. Year to date, yeah, I'm sorry, quarter to date, the S&P was down 1.1%. The Dow was down, well, not very much, about 11 basis points. This was before today's rally. Let me just say that. This was as of Friday. The EFA, which we talk about all year long, is down 1.38% for the quarter. The emerging market index is down three quarters of a point, and our favorite, the NASDAQ, is down 1.63%. And you know what? We're going to sound like broken records. It's been still a very, very good year. The S&P is up 13 and a half before today. It's up a little bit more now, probably closer to 14. The Dow is up almost 10 and a half. The Nasdaq's up 16. So I would still take those numbers right now if this was New Year's Eve, but it's been a little bit of a choppy quarter, and I think it'll stay that way at least for another couple of weeks until we get some direction on interest rates.
Yeah, Mike, I think looking at it quarter to date, which includes October, gives it a little bit better look than it actually is because through the end of October, the markets still were in rally mode. We had a terrific October, but month to date, just the month of November, which historically is a little choppy, right? Historically, it's not one of the better months of the year, and it's proved it so far. The S&P about 5% off the high. The Nasdaq about 6% off the high. International stocks last week were down about 3% just for the week. So November is living up to its billing, which historically not a great month. But I'll kind of go right there in that, yeah, kind of expected, kind of anticipated, kind of not what we would like, but generally not negative either. Just a little bit of a retracement, and especially some of the high flying sectors, high flying stocks.
And I heard you said, not what we would like. So you almost stole my thunder a little bit because I was going to say good. Like, we enjoy a little bit of a good, healthy washing out, don't we?
Well, if you're set up for it, right? And anybody that's been watching the show and listening to it, we've been kind of being a little bit defensive now for quite a bit. And then I want to stress that, we often talk about the S&P, this bucket of 500 stocks or the NASDAQ 100. But the reality is we have seen very specific segments of the market, particularly technology, AI related, Bitcoin related. They've really, really kind of taken it on the chin. They were this year's high flyers. They're coming a little bit back down to earth. And something as boring, mundane as healthcare, which was negative most of the year, this has been one of the better performing sectors this month, where healthcare is up about 6-7%, but tech growth stocks are down 6-7%. So we're seeing that seesaw flip. So yeah, Mike, I'm with you. Good. Good, a little sanity coming back to these markets where not always the high flyers need to be leading the market. We can see other mundane, earthy, good core groups of the market performing well.
So before I put you on the spot and ask you why about healthcare, I'll let you noodle that around for a few seconds. Just to put technology into perspective, in spite of the recent sell-off through Friday, the communications sector of technology was up 27.4%. Technology, true technology, was up 19.2. So again, a normal person would say, great, sign me up for those. But
Uh,
let's talk
uh,
about healthcare.
Yeah,
Health,
so on your point of technology, really quick, Mike. Yeah, if you own this since January and you own all the name companies, the Nvidias, the Microsofts of the world, even Oracle, which has just gotten decimated in the last month. But if you own this since January, you still got to be smiling, right, Mike? You have amazing, amazing returns. But we always talk about valuation, and clearly, in my opinion, humble opinion, valuations have gotten way ahead of themselves. And so they're just coming back down to earth, which I think is healthy. And then flipping to healthcare, based on what some presumptions about what this administration was going to do to drug companies, to healthcare companies, to think of the United Healths of the world and Medicare and Medicaid. There was some really dark clouds over the industry. It looks like maybe not as many of these dark clouds are going to come to fruition. And we went from just the sector getting decimated, now actually having a healthy return for the year. And if you bought it during those lows, my God, you're doing really well, Mike. Really well.
yeah, it's up 14% for the year. And really though, Dom, I guess my question was going to be, I mean, I heard what you said that things weren't as bad as it was anticipated, and it really never is as bad as anticipated. But depending on who you believe, depending on your news bubble, Bobby Kennedy, who has no medical experience whatsoever, is still in charge of the health system. And again, if you believe the Democrats and some Republicans, um, there is a healthcare crisis as it relates to insurance, which is this, mounting concern as we getting towards the end of the year. So, do you really think it wasn't as bad as it could have been? Is that why we've had this rally, or has it been something else different?
I think mostly it's just not as bad as some people had thought. And we've talked about it. This has been a subject that's come up in the past. If you need a knee replacement, Mike, are you really not going to get it done? If you need to take your Lipitor or you need to take your statins or you need a bypass, are you really not going to get your bypass done? So, just in general, healthcare is a sector of the market that's pretty resilient because at the end of the day, people are just going to take their drugs and going to take their operations to stay alive, right? They're not going to mitigate on that and go, oh no, it's too expensive. I'm not going to get that procedure done. But there were some really negative implications about what potentially was going to happen to this sector. And at the end of the day, there is a lot of benefits to healthcare, i.e., you live longer, you live a healthier lifestyle. This is productive for the economy. And it does seem that this administration's softening its tone to how they're going to treat drug companies, particularly. But the flip side of that, to your question, Mike, there's been a lot of compromise also by some of these drug companies, some of these healthcare companies on their costs to consumers, to Medicare, Medicaid, and that gives them lower profit margins but higher volume. They'll take that bet, and it looks like they have.
Yeah, but look, there is and you sound like a broken record. There is a healthcare crisis in this country for the lower third, and your premiums go up and people can't afford coverage. That is tragic to those families and those people, but also, Dom, that spreads throughout the entire economy.
So, look, we see a very large percentage of the population who's generally unhappy with the state of the economy. So it seems almost counterintuitive, Mike, because generally speaking, the economy is relatively healthy. The employment numbers are actually pretty decent. Corporate profits, all the indicators we look at But yet, how many times have we talked about the cost of living, Mike? There's at least half the population, at least, that is struggling week to week to put food on the table and pay their bills. So they don't care how great the economy is. If I don't have enough money to pay my rent, to pay my mortgage, to put food on the table, to pay for my health care, then guess what? The picture is pretty bleak. So, should that get worse, and I think you're alluding to this issue of a tax credit that is expected to
Quarterly, when we had Jeff on in April, it was right after the tariff debacle. Um, and then I missed his summer show. You did it with Tracy. So Jeff and I haven't spoken about this in quite some time. I know you got his perspective in the summer, it was a little rosier, but we're going to get his outlook now, as we're knee deep in the end of the year, of what CEOs of small and mid-sized businesses are thinking heading into 2026. So we will be right back with Jeff Oak, Vistage Chair, right after a quick break. All right, I'm Michael Hartzman, back with my partner Dominic Tavella, as always, and our special guest this evening, Jeff Oak, a Vistage Chair on Long Island. Does a great job. I'm a proud member of one of his groups, and always a contributor on Vistage's CEO Economic Outlook. What do you have? 60,000 members? Is it a lot? It's a lot.
45,000 members in 40 countries.
So you guys do a great job of really getting your finger on the pulse of companies. And before we jump into it, I understand you have joined an exclusive club that Dominic and I are a part of. Um,
proud part of.
Yes, yes, I'm a grandfather.
so
I'm about 8 or 9 days into it. So, and I'm just delighted.
So Mazel Tov on being a grandfather, and welcome to the world, Avery, Teresa, and
Yes.
good luck to the entire Oak clan.
Yes,
And Jeff, it does take a little time to come off that cloud, but 18, 21 years, but enjoy the ride while you're there
I
because
tell you,
it
I
doesn't
don't
get
think
any better.
I don't think being on the cloud is ever going to end. But thank you both. Thank you
All
both.
right. Congrats.
Thank
Congratulations. And just so you know, a week ago Saturday, I picked up my two older granddaughters, and one of them spent a half hour sneezing in my face, which is why my voice sounds like this, and it's perfectly fine. I guess that's the point.
you. Good to know. I'll remember that. I'll remember.
Exactly. All right, Jeff, let's just jump into this. When you and I and Dom spoke about this back in April, business owners were miserable because of the tariffs and the uncertainty of the tariffs. And looking at your notes this morning and a report you sent me, it appears they're being a little bit more optimistic as we head into the new year. Is that correct?
Yes, gosh, it's really hard to remember all the way back to April and June, and then even going back to December right after the election. It was like a whipsaw from December to April, and then some modulation. And when we take a look at, let me first give some context for your listeners as to why we believe that this economic outlet is worth listening to. I always like to remind people that small businesses create 75% of all new jobs. 3 out of 4 new jobs in the US is from small businesses, and they generate 50% of all national revenue. So the voices of CEOs of small and mid-sized companies, this is not a small sector. It's simply a lot of small companies. So, what we really measure in the surveys that we do is the sentiment. How are CEOs feeling? Not only what are they thinking, in their gut, what are they feeling? And remember, these are small business owners. They are making bets with their cash out of their own pocket every day. So it's a very unique look. And when we take a look, there are 3 headlines, and the first one you teed up, Mike, and that is, what's the economic outlook, from 30,000 feet? And CEO confidence, the confidence of CEOs is kind of in neutral. They seem to be waiting. Are we going to pivot toward prosperity, or are we going to retreat into recession? And so they're reserving judgment. There's a level of neutrality. There's not any great news, and there's not any horrible news. So our index, which is based on 6 key components, shows that we're up a little bit in Q3. And by the way, that's the data I'm looking at is Q3 data, just a little bit up from Q2. Okay, that's good news, but that's still below, that's lower than the low during 2024 before the election. It's also well below the average in the 2010s. So, yes, it's good to see a little bit of improvement, but it's pretty mediocre. It's pretty blah. And the message from this is that CEOs, they're kind of a neutral.
So, Jeff, if we look at, and I remember distinctly the survey you did after the election, there seemed to be a lot of euphoria out
Yes.
there that maybe change was coming, maybe positive change from an economic perspective. And of course, the tariffs just killed the mood. So when you did the survey back in April, it was pretty bleak.
Yes.
I mean, we've had some clarity in terms of what the tariffs might look like and what the effects on the economy might be, but there's still a lot of ambiguity going forward. So I think that ties into your survey there. We just still don't know what this
Yes.
picture is going to look like.
Yes. And I think I want to put some numbers on your comment, Dom, which is extremely appropriate. After the election, the CEO confidence index was at 100.8, one of the highest numbers, if not the highest number, since the 25 odd years of the survey's existence. And then in April, I mean, it dropped like a stone. I mean, it dropped to the mid 70s, a huge drop. And now it's climbed back a little bit. It's gone from a low of 77, our confidence index, to where it is now, which is just a little shy of 82. Still well short of that 100 mark. So it was, when you look at the graph, it's like a mountain in the Alps back in December, and then dropping into the troughs and a little bit of recovery in that confidence in Q3. But you're absolutely right, big swings, and I do think that most of the impact of tariffs, I'm not going to say all, I'm going to say most of them have either been woven into business operations, or CEOs have figured out how they're going to manage it. And there is still some uncertainty about the residual impacts. There are some who are saying that the tail on the tariffs, even if there's a certain product or sector where there are zero tariffs, there's a very long tail of impact that we're still seeing.
Jeff, I think the answer is no, but I'm going to ask anyway. Does Vistage ask their members? Well, I know the answer because they didn't ask me. They don't know the political affiliation of their members, do they?
Correct. They don't.
Because it's clear that what I've read, the independents in this country is what basically helped Trump get back into office. And then, as the year wore on, tariffs came into play. It seemed like many of the independents may have had a little buyer's remorse. So, do you have a feel of kind of where these swings are from, or is just kind of a general uncertainty, or or is there a big swing, or it just been kind of very subtle at the moment?
So let me first say we have no idea the political affiliations of any of our members, nor is that a question on the survey. I'm not a political commentator, so I have no insight from that perspective. But one of the things that makes this survey so powerful, these are people trying to run small businesses, and they are having to make decisions. Do I hire? Do I invest? Do I acquire? Do I give people raises? Do I hire people, or do I let people go? Do I fill positions, or do I leave them vacant? These are all financial bets that they're making. And the residual uncertainty and not really knowing where this is going to go. I'll go back to, I'll just repeat, what I said earlier, that when you look at the numbers, that seems to be the CEOs are waiting to see where this is going to go next. Are we going to go toward prosperity? And are we going to go into, I don't think a recession is on the radar the way it was, a number of months ago, but are we going to go into a decline in terms of these macroeconomic indicators? It's just not clear. The data is not clear. It's
And Jeff, I mean, we've had very limited employment data because the government did shut down. But
yes,
what we've seen, particularly out of ADP, is exactly what you're saying. Small businesses are not really hiring, but they're also not really firing, laying people off. They're kind of sitting in this limbo until they see some clarity. So I
yes.
think it ties exactly to the point that your survey found.
Yes, and it's the larger point, Don, that you're saying, that I believe is very well, good to remember, well and good to remember, is that you know we all like stability, we all like uncertainty, even if things are going poor, even if things are not going great. To have a clear picture of that, better that than not knowing. We still seem to be in a little bit of not knowing, which when we don't know what, just imagine ourselves and how we spend our own income in our households. If there's uncertainty about what's going on, we're going to say, well, let's not go out to eat. Let's have leftovers, or let's eat at home. We make those little decisions all the time, and in small businesses, it's writ large.
what's super important about what Vistage does is it's forward looking.
Yes.
Because the data we get from the government is backwards looking. It's what
Yes.
already happened. And so I think, when you do a survey about what are you going to spend, that is more telling than what did you already spend,
Correct.
right? So looking at the data, and I'm just going to hold up this chart so you know what I'm looking at, Jeff.
Yes.
Um, 20% of CEOs reported economic improvements, up 3%, up 3 points from 17%. So I guess the good news is it's up 3 percentage point. I guess the bad news is it only went from 17 to 20.
Correct.
So I guess that's where you guys come up with the idea that yeah, things are creeping up, but they're certainly not robust.
Absolutely. I appreciate that comment, Michael. So a couple things. Our index is there are six core elements that make up the index. And in the Q3 data, every one of those is up, but only a little bit.
Yep.
Now, better to be down, but they're up just a little bit. And some of the raw numbers um, are low. The one that you pointed to, see, 1 out of 5 CEOs are reporting economic improvements. That means 4 out of 5 are not.
Yeah. Yeah, they're up
So,
from, I'll just say it, Jeff, you're too polite. They're up from crappy numbers.
yes, yes. So, uh, so the other thing I would say, one of the striking things about this economic data, this is just CEO confidence index, is that we kind of accidentally, the economists that help us put this together, who take all the data that we provide and analyze it, they stumbled across something that's very interesting. Our index, CEO confidence index, is a leading indicator of one of the major indices in the macroeconomy. It's called the U.S. Industrial Production Index, which you guys know well. And when you look at the numbers of Visage's CEO confidence index and lay it against the U.S. Industrial Production Index, a funny thing happens when you look at that. Our index is a leading indicator 9 months in advance of what we subsequently see in the industrial production index. Now, is it a forecast? No, it's not a forecast, but it's super helpful. There aren't many indicators that give you a sense of what's going to happen. And I don't want to make more of this than there is. I don't want to suggest that it is predictive and we can buy stocks or anything else on the basis of it. But there's a different kind of lens on this index to the extent that it's a leading indicator.
Well, Jeff, and again, credit to you guys for doing this. And this is one of my favorite segments because it is a leading economic indicator. As far as I'm concerned, if the mood is positive, then businesses are going to hire, businesses are going to expand, they'll add inventory, they'll add manufacturing. If businesses are negative, then it's the exact opposite. And blah right now, which is I think where we stand, sorry to get so technical, blah, it
Yeah.
means that, yeah, economic growth is not going to fall off a cliff, but not likely to skyrocket unless there's a mood change. And I think it ties also into what the consumer does. I think we see it all the time. Consumers are happy and giddy, they spend money. They're not happy and giddy, they hold on tighter to their dollars. So there's a direct link between the mood and the economic output of
Yeah,
the.
and that's why I like starting with the small, really pausing about the small business. Matt, you're running a business, you're running a bakery, or you're running a small manufacturing firm, or coffee shops, or what have you. You have to make your decisions today based on what you think next week and next month and next quarter it's going to be. And because many small and mid-sized companies have lesser cash to play with, um, they've got to spend their money very, very carefully. And so when you think about who is filling out this survey, it's individuals who are having to make future based decisions every day.
Mike, do you mind real second? I just want to make a point. And typically they're making those decisions with their own dollars, right? These are
Exactly.
typically small business
Yeah,
owners who have to put their own capital at risk to make these decisions. This is not some Fortune 500 company that is basically using other people's money.
exactly.
Sorry, Mike.
Couldn't have said it better myself.
No, look, you're 1,000% correct. And to your point, Dom, and you mentioned it a few seconds ago, the consumer, and we've said it 1,000 times on this podcast, they have been the gift that keeps on giving. And the data this morning out of the consumer was not great either. And so the consumer confidence index dipped a little bit. And guess what? These business owners are also consumers, right? They
Yes.
they may own a bakery or a factory, but they also need to buy clothes and go to Home Depot. So if they're not feeling good about their businesses, they're also slowing down their own economic activity. Isn't that true?
Yes, absolutely. For many business owners, rightly or wrongly, their own financial resources are often closely intertwined with the financial resources of their business. There's not, for many small business owners, the line of credit for the business is, whatever their house or something else. Um, and and yes, there is an intertwining that there is in many small and mid-sized companies that is not the case in larger companies.
So, Jeff, when we kind of started this, we talked about the election and the mood was really positive, and then, of course, the tariffs in April, the mood was really negative. What gets these people out of this funk? Have you surveyed at all what they're expecting to hopefully turn the situation around?
Thank you for teeing up one of the future headlines, which is what they are doing and also some insights into what they should be doing.
Which is what?
We're about to go on break.
Oh, you're fantastic.
Yeah, he was
I didn't
teeing
know
it
you
up
were the
for you,
host.
Mike. He was teeing it up. So I think it's a perfect spot to pause, take our normal break, and we could jump right in it on the return.
Yes.
Matt, the producer, you heard them. It's time to take the break. All right, I'm Michael Hartzman back with my partner Dominic Tavella for our final segment with our guest this evening, Jeff Oak, a Vista's chair on Long Island. So, Dom, why don't you kind of reset the table for the question Jeff had?
Yeah, Jeff, I kind of left you there on a cliff hanging, and I know you were excited to give us an answer, so let you jump right in. Go ahead.
Okay, so the we've talked in the first half of the show about the uncertainty that we see reflected in the numbers and what uh, the high performing CEOs are doing is responding in kind with cautious optimism. And I shared with you that in the break that there is neutrality, there's uncertainty, there's ambiguity, there's tentativeness. And so the appropriate response is cautious optimism with a focus on the fundamentals. And in particular, this is more of a recommendation. And what we see in our highest performing CEOs, it's more of a recommendation than a clear data point in this index that being disciplined with respect to margins is key. Um, we have a phrase that we sometimes use: be on the watch for what we call profitless prosperity. What's profitless prosperity? Prosperity. That's when your revenue grows, but your margins don't. So yeah, your company's getting bigger, but your profitability is either staying the same or going down. That's what can happen when you lose the focus on maintaining discipline with respect to margins. Despite the ambiguity, CEOs and owners have to make decisions about hiring, about investments, and about pricing. For them to wait for perfect clarity is just not an option. So simply moving forward in the context of uncertainty and to focus on the fundamentals, protect margins, build resilience, and then I want to get to a really key theme, really focus on the workforce.
So, Jeff, if I could just add on to that question of what do these CEOs do going forward, but what I'm seeing and what I'm literally hearing from my own clients is the cost of goods and trying to pass on those cost of goods to the consumer is becoming more and more difficult. And back to your protecting margins, it's becoming more and more difficult to protect those margins.
Absolutely, because I think even companies that have baked the tariffs into their pricing, they've already made the pricing, in many cases, they've already made the pricing move. And to go back out with another pricing increase is a little bit risky when if you go and you buy a cup of coffee and you pay $4 today and it costs you 4.50 tomorrow. You're not going to be too keen on it going up to $5 next week or next month. You'll absorb it for a little while, but if the prices keep going up, if you're an owner, you got to worry about losing people. And so I think, pricing is a really key question that's part of the margin equation. You also got to think about hiring. You got to think about investment. You got to think about, resilience and making smart moves.
So that's a great segue, Jeff, for my next question. Are small business owners embracing artificial intelligence? Are they afraid of artificial intelligence? Is it a tool, as you said, that they look at for, increasing their margins, lowering their cost? I mean, Dominic and I use AI for just that reason. We use it as a tool just to make us more efficient in one shape or another. What are many small business owners doing with AI? How do they feel about it?
My answer is to all of your questions, yes, 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 and yes.
Good.
So there are some businesses that perhaps are hardly ever using it. I think those numbers are getting smaller and smaller and smaller all the time. There are small business owners who are um, putting their toe in the water. There are some that are they're up to their shins, and then there are small businesses that are in deep. Part of it is a little bit of a function of the kind of business that you're in. If you are in hospitality or food services, yes, you can use AI in sort of back office stuff and in a certain number of customer facing activities, but you still got to have somebody at the desk. People aren't going to be happy when they walk into a hotel and their key isn't working, and there's nobody at the desk, or there's nobody or the kiosk doesn't work at the restaurant. So, and then you have other companies manufacturing certain kinds of manufacturing are well positioned to implement more AI in their processes, and certainly technology firms significantly so. I do think that what we are seeing, if someone wasn't doing anything with AI, they're doing a little bit now. If they were doing little 6, 8, 9 months, 10, 12 months ago, they're doing much more now. So this I see an acceleration in adoption rates among small and mid-sized companies.
Jeff, we're literally around the corner from the holiday season. We got some retail sales number this morning that actually looked pretty decent. Are these small businesses, which many of them are very, very dependent on the holiday season? Some of these businesses, the majority of their sales come in these last 30, 60 days of the year. How are they looking at the holiday season? Are they counting on it? Do they expect it to be positive? What kind of feedback are you getting from your own clients?
Yeah, so we don't our level of questions doesn't get down to that level of granularity. Dom, we do have um, slices. What I'm sharing with you is the national data, but we do slice and dice among different industries. I don't happen to have the retail data in front of me. Certainly, there are many businesses for whom the last couple months of the year are quite important. I think I would just go back to my original comment that focusing on the fundamentals, not getting out over your skis, being cautiously optimistic, protect margins, build resilience, make investments. Don't cut off uh, the general investments that a company needs just to remain competitive. You can't be waiting for perfect clarity to have all of the answers, but it's really about caution, steadiness, discipline, pretty much across the board.
Jeff, you made a comment a little earlier about one of the priorities of small business owners was to take care of their employees.
Yes.
So obviously, Dom and I do a lot of retirement planning. We have a lot of 401ks that we help out with. What do you mean? What was the interpretation of that comment? Take care of your employees.
Employee engagement has never been more critical. Let me tell you why. What that was the message. There's a lot of economic turbulence and instability. In order to navigate that environment, organizations have to be high functioning in order to manage and thrive. And certainly, generative AI can be helpful. But at the end of the day, to get across the what I'll call the AI chasm, to get from here to there, to get from the current world to the new world, you got to have a workforce. The organization Gallup has tremendous data that is overwhelming that says that with highly engaged employees, you have lower turnover, you have higher retention, you have higher productivity, and higher quality in the output of employees. And the CEOs who get that are going to be extremely well positioned, much better positioned. It's one of the most central core competencies, core fundamentals that I was touching on. We did survey in this particular quarter a deep dive on employee engagement among our members, and we discovered that 8 out of 10 CEOs are using one-to-one meetings and regular check-ins to gauge employee engagement. Does your work, do you feel like your work matters? Do you feel like you matter? Um, are you maintaining the appropriate balance in life? Do you feel like you're respected? A whole range of questions in employee engagement surveys. Um, Employers of small and mid-sized companies are using more and more. We also looked at how they're designing the workplace to positively impact employee engagement. What are examples of that? Hybrid models that are strategic, that are smart, and that are clearly communicated. Depending on the nature of a person's work and the nature of a business, um, more or less hybrid can vary a lot. If you run a bunch of restaurants and coffee shops, you're not going to have much hybrid because you need people to wait on tables and serve food. But in certain industries, you are able to allow people to work at home. I'm seeing that the best and highest performing CEOs are doing that in a smart and strategic manner. Rigid on-site policies without clear rationales or explanations are not going to help engagement. In fact, they're going to negatively impact it. If you have hybrid, doing it in an unequal manner is not going to get you engagement. It has to be consistent. It has to be clearly communicated. And CEOs who are using that in-person time, the time that they're doing one-to-ones with their employees to promote their culture, to build trust, to foster collaboration, to boost connection, they're going to have a more highly engaged workforce. And with a more highly engaged workforce, they're going to be differentiated competitively. They're going to have a big advantage.
Dom, can I ask one more question?
Please, Mike. Yeah.
So, Jeff, to your point, at this point, it's usually the baby boomers and the Gen Xers who that are in the corner office, and it's the millennials and the Gen Zs who I think are want this workforce to change or the work environment to change. So, what came first? The younger generation demanding this and the older generation being forced to embrace it, or is the older generation embracing these changes willingly?
It's a great question, Mike, and it's a complicated question. So the way I would answer it is this. This is the first time in human history that 5 generations are working side by side in the workplace. And what make generations different from one another are the historical events that shaped them when they grew up. It's how they used technology or didn't. It's how leadership was modeled for them. It's how parents talked about the workplace and the relationship with employers. It's how families talked about the importance of family and what good parenting looks like. We've all been shaped by different factors. The three of us were shaped by a very different set of factors than 20-year-olds and 30-year-olds who were shaped by 9/11, by the Great Recession of 2008, and by COVID. The impact on COVID on schooling of kids, I think that's a story that's yet to be fully told because we don't know all the impacts. And so the way I think about it is not that the younger generation is either better or worse and the older generation is either better or worse. they were shaped by different things. Their value set um, is different. Not that it's better or worse, it's simply different. One of the advice that I give to my members when the question of how do I manage these different generations in the workforce is my counsel to them is twofold. Get comfortable in your own generation. Don't try to be something that you're not. And be curious about generations that are not your own. Be curious, ask questions, act like an anthropologist in a foreign country, and try to understand the culture, try to understand the language, try to understand the values, and respond accordingly. So I think it's not so much for me, it's not so much a chicken and egg question as much as it's an evolutionary one. Generations have been shaped differently, and when someone is shaping is very different from our own, we have a lot of learning to do. Learning needs to go in both directions.
Hey, Jeff, based on a commentary you made about what CEOs should be doing regarding their employees, I kind of got the feeling, and correct me if I'm wrong, that we pretty much have a stressed labor force. Is that
Absolutely.
so? You would agree with that, right?
Absolutely.
Yeah.
Absolutely. It's yeah, gosh, the labor market is tight, and I think owners are still trying to navigate how do I engage um, the different generations? How do I incentivize them? How do I reward them? How do I lead them? How do we manage their performance? How do we leverage the unique strengths that they bring? And how do we shore them up where perhaps they need some help? And I would say the same thing about every generation of the workforce. We take certain values as a given, the three of us on this call, because we're roughly in the same age cohort. Our value set, I would be willing to bet, is it's not identical, but there are a lot more similarities than differences. But I think my counsel to, to myself and to people my own age and my own generation is to get curious about the younger generation, seek to learn, seek to understand, so that you can really get the best from them and they can deliver their best to you.
Dom and I have been very fortunate that our children work with us and we have a lot of young people around us, and we both defer to them when it comes to technology and don't make changes. And Dom and I just know, well, don't be a cheapskate. Like if they want to spend some money on technology and it makes us more efficient, that's what's dragging us into this AI boom.
Yes. I think it's a great point, Michael, and kudos to you for doing that. And one of the last data point that I think might be relevant in this conversation from the Q3 data is how CEOs are prioritizing transparency in the workplace, how they're prioritizing the importance of culture, the importance of recognition. And I think we're seeing that the best CEOs are appreciating the value of leadership transparency and clear communication of the workforce. They are seeking to underscore and to build and to nurture a positive, values-driven culture. They are finding ways, creative ways, to develop recognition programs, career ladders, and appreciation of employees. The CEOs that are doing those things, they're skating to where the puck is going. And my encouragement to all leaders is to look at where that puck is going, and to skate in their own context, to skate where it's going.
Dom, you
Hey,
got a
Jeff,
minute.
I'll
Last
give you
word.
the last out on this one. I mean, entrepreneurs in just general, you better be an optimistic human being because you're opening the door of your business every day. You don't know what the outlook is, but maybe I'll let you conclude with maybe a little optimistic points of view going forward.
So I think it's exciting just on this employee engagement topic. The level of interest of CEOs in general and the CEOs that I work with most closely in particular are giving a lot more attention to leadership development programs to cultivate their people, to bring out the best in them, to help them be their best, to bring their best selves to work. And the level of commitment that I'm seeing more and more among leaders to developing the next generation is a sign of real hope for me.
Love that. Thank you, Jeff.
That's a great place to put a bow on and to start the holiday season. Thank you, Jeff.
You're welcome, Michael.
So that brings this edition of the Lebenthal Report to an end, and we will see you next time on the Lebenthal Report. Have a good night, everybody.
Happy Thanksgiving all.